And joining us now, first on CNBC before the earnings call, is Jacob DeWitte, Oklo co-founder and CEO. Jacob, welcome. First, how should investors think about this company? It seems, based on the structure, it's almost like a gold mine or a biotech, in the sense that you're reliant on certain approvals, but then if it works out really big.
Yeah, it's an interesting question, and thanks for having me on, and happy Veterans Day to everyone. I think it's one of those dynamics where we're looking at, it's actually an interesting analog in the gold mine side, because what you think about we're focused on producing is one of the most important and valuable commodities that exists today that is also pretty significantly undersupplied in the country, which is power. And I think that's a huge opportunity space for it to be, for us to be building into. And so if you think about what that size looks like and backing it sort of from that angle of realizing, hey, abundant, large-scale energy supplies are going to be worth a lot for enabling all the things that we're wanting to do as a country. AI obviously is a big piece of it, but it's also things related to what you just talked about on defense, but also other things on commodity production and manufacturing. It's pretty clear that a company like ours that has a pretty unique positioning to be able to bring that to the market in a really constructive way is a pretty exciting opportunity space. And then there are significant unlocks on the regulatory side. And by the way, one of the things that's really exciting is on the heels of the executive order signed 6 months ago, there's actually been a lot of de-risking in the regulatory space that I think the market is still really digesting. But that's really sizable in its impact towards realizing what you said, this kind of inflection point on growth.
For sure. And I think investors have to figure out before there's really a cadence of revenue after your execution, what the profitability model is going to be. Where does fuel fit into that? You have sort of some unique access to fuel in this situation. It seems like you've got a faster track to being able to get some of these nuclear facilities up and running. But give us a sense of where recycled fits into that versus, some of the government supplied and other.
Yeah, this is one of the cool things that's really different about us. Nuclear is going to play a really important role in energy going forward, no matter what. And one of the great things about our ability to tap into that is what we can do on the fuel side. That is so critical on delivering power, right? And that's why we've been focused on this since the beginning. We have a reactor design that can use a multitude of fuel sources, which is part of the reason why we have some of those fuel advantages in getting fuel now. But it's also not constrained in the bottlenecks that a lot of others are, which is purely dependent on expanding enrichment capacity. Yeah, that's great. We'll be constructive. We're partnering with folks to help there. But we can tap into these other government sources of fuel, like, for example, some of this excess plutonium that the government was going to spend a lot of money to bury and get rid of. Instead, they're making available now to fuel reactors. That's enough fuel to offset, over 180 tons of enriched uranium need otherwise. That's a huge amount of fuel that we are pretty uniquely suited to be able to build from. We're not the only company, but we're really well positioned there. And that bridges us forward into recycling as well. And that recycling opportunity is hard to overstate because it's a cost saver and, by the way, opens up additional revenue streams.
I find, as I'm listening to CEOs, to companies talk about the upside and the promise, it tends to go down a lot easier, more convincingly, if they can also articulate the risk and the downside. So in all of this, given all of the advantages and strengths that you mentioned, how could this go wrong? What do investors need to think about the potholes in the road that could make this happen slower than you think?
Yeah, I think that's it's a thing we think about all the time since we started the company. It's what we think about all the time to both design for, solve through, and mitigate against. I think one challenge has been regulatory dynamics and regulatory friction and headwinds. I think we feel really excited about how we're positioned there and some of the de-risking that's occurred, opening up different opportunities and pathways as in the Department of Energy and Department of War, as well as the NRC. So, that's a watch point. Does it take longer? How long does it take? But now there's pretty clear indications that we're actually finding those moving to the left, which is one way to help with that. But look, things can still take a bit longer. We were really excited that our fuel permitting, we got that done in a matter of weeks and kind of a record-setting time frame. So that was a good indication. But look, before that, it was taking a couple years until these kind of policy changes happened. So that's a big shift. I think additionally, it is a volatile market in the fuel side. So some things are going to be more expensive than not as ultimately this kind of converges. But again, that's why we're mitigating to having the opportunity to use other sources of fuel and ultimately controlling our destiny with recycling. One piece on that, the used fuel in this country, the waste in that, has enough energy remaining to be equivalent to about 1.2 trillion barrels of oil. Okay. That's like global oil reserves. It's a huge opportunity, right?
That's a big stat. Unfortunately, we're going to have to leave it there. I know you got a call to get to as well. Jacob DeWitte, CEO of Oklo.